It is 5:47 a.m. in zip code 10004, Lower Manhattan. You are not awake, but your money is, or rather, the money you think is yours. The architecture of the American dream was not drawn by poets. It was drafted by actuaries at firms like Vanguard and BlackRock, men who view your life as a series of predictable risk-adjusted returns. You've been told that if you follow the rules, the 401k contributions, the diversified index funds, the disciplined tax loss harvesting, you will eventually arrive. This is a mathematical lie. The system was never designed for you to get rich. It was designed to keep you liquid enough to remain a gear, but never heavy enough to stop the machine. On your desk sits a 10K filing for a company you will never own. You spent 14 hours today calculating its discounted cash flow. In exchange, the machine grants you a steady 120 basis points of growth and a prescription for 0.5 milligrams of Xanax to handle the Sunday scaries. You are a participant in a game where the rules are written in a language you weren't taught. While you celebrate a 7% annual return, the architects are utilizing stepped-up basis and 1031 exchanges to move billions into the shadows, untouched by the friction of the IRS. This is not a video about wealth building. This is a cold autopsy of the financial infrastructure that owns your time. We are going to deconstruct the 5 levels of the American wealth trap. Welcome to the engine room. You aren't a guest here. You're the fuel. Level 1. The liquidity pool. You start here. The entry-level analyst, the middle manager, the responsible citizen. You live in a zip code like 60606, where the property taxes are calculated to extract exactly 28% of your discretionary income. You believe you are building a life. The system sees you as a source of cheap liquidity. Every paycheck that hits your Chase or Wells Fargo account is immediately lent out at a 10-to-1 ratio. You are paid 0.01% interest for the privilege of letting the bank use your labor to fund the very corporations that will eventually automate your job. Your primary tool for wealth is the 401k. A brilliant piece of financial engineering designed by the Revenue Act of 1978 to shift the pension liability from the corporation to your shoulders. You are told to set it and forget it. While you sleep, the funds are managed by institutions with trillions in AUM. They take their basis points off the top, win or lose. They are the casino. You are the player who is happy just to be allowed inside the building. The cost of entry into level 1 is not just capital. It's the erosion of the self. It's 7:14 p.m. on a Tuesday. You are staring at a DCF model, trying to find an extra 3 cents of value for a shareholder meeting you aren't invited to. You miss your 3rd anniversary dinner. You send a $200 floral arrangement via an app to compensate for your absence. A cold business transaction, a premium paid to keep your seat at the desk. You celebrate a 5% raise. But in the background, the Fed targets 2% inflation, and your bracket creep ensures the IRS takes a larger slice of your nominal gains. By the time you account for the cost of living in a Tier 1 city to keep this job, your real net worth growth is stagnant. You aren't climbing a ladder. You are running on a treadmill powered by your own anxiety. You spent your 20s mastering the language of the 10K, believing that knowledge was power. It's not. In level 1, knowledge is just the specialized labor required to keep the gears turning for those in level 2. You are liquid. You are accessible. You are replaceable. The machine has processed your youth. Now, it wants your leverage. Level 2, the debt architect. You've graduated from managing your own money to managing the movement of others. You are no longer just fuel. You are a pipe. You work in private equity or structured finance. Your job is to find healthy companies, strip them down, and load them with leverage. In the world of carried interest, you don't earn a salary, you earn a piece of the profit. But first, you must engineer the LBO, the leveraged buyout. You use a small amount of equity and a massive amount of debt to buy a company. You then make that company responsible for paying back the loan you used to buy it. It is a parasitic masterpiece. If the company thrives, you take 20% of the upside. If it chokes under the debt and dies, you've already extracted your management fees. The price of carried interest is paid in human currency. It is a Saturday morning. You're in a conference room in Midtown, debating basis points on a bridge loan while your father goes into a quadruple bypass 3 states away. You don't leave. You can't. The deal is in its final haircut phase. You trade the presence at his bedside for a potential 7-figure bonus. You justify it by telling yourself you'll pay for his recovery. The machine appreciates your sacrifice. It makes you easier to control. You are the reason the local grocery store is now a national chain with worse produce and higher prices. You optimized it. You reduced the headcount by 15%, right-sizing the labor force, which is clinical shorthand for destroying 300 middle-class lives to improve the EBITDA. You aren't a villain in your own story. You are an optimizer. You are simply ensuring the flow of capital remains frictionless. At this level, you begin to see the stepped-up basis trick. You realize that the truly wealthy never sell their assets. They borrow against them. If you own $100 million in stock, you don't sell it and pay capital gains. You take a loan against the shares at 3% interest, live off the debt, and when you die, the cost basis resets for your heirs. The taxman never touches the principal. You've learned the first rule of the architecture: only the small gears pay for the grease. You have more money than you ever imagined in level 1, but you have less freedom. You are tethered to the debt you've created. You are now responsible for the returns of the level 3s. You've built the pipes. Now you must find the water. Level 3, the yield seeker. You have transitioned from the person doing the work to the person managing the expectations. You are a portfolio manager or a managing director at a Tier 1 asset management firm. Your life is no longer measured in hours, but in basis points. You oversee billions in AUM. Your clients aren't people. They are institutional investors, pension funds for teachers you'll never meet, or sovereign wealth funds from nations you couldn't find on a map. They demand yield. In a world of suppressed interest rates, finding a 7% return is like hunting for water in a desert. You don't look for value anymore. You look for alpha. The human cost of level 3 is the total commodification of your relationships. You are 42 years old. You just bought a 6-figure engagement ring for a woman you haven't seen in 3 weeks because you were in London closing a deal. You don't call her. You have your executive assistant send a car to pick her up for a scheduled dinner. Love is a line item under retention costs. You realize now that the market is an illusion. It is a closed-loop ecosystem. You use the liquidity from level 1 to buy the debt engineered in level 2. You sit on the boards of the companies you own, voting on executive compensation packages that ensure the CEOs stay loyal to the shareholders, not the employees. You are the enforcer of the status quo. If a company dares to prioritize long-term stability over quarterly dividends, you liquidate the position and move to the next host. You are a master of the carry trade and tax loss harvesting. You spend your afternoons with tax attorneys discussing how to move capital through Luxembourg or the Cayman Islands. It's perfectly legal, drafted into the code by lobbyists your firm helped fund. You aren't breaking the law, you are the law's primary beneficiary. You are a ghost in the machine, moving mountains of capital without ever touching a shovel. You have achieved wealth, but you have lost utility. You are so deeply embedded in the architecture that you can no longer imagine a world outside of it. You are terrified of a single-digit correction in the S&P 500 because it would mean you failed the only metric that defines your existence. The water has reached the reservoir. Now you meet the builders. Level 4. The system architect. You have left the trading floor. You no longer manage money. You manage the environment in which money exists. You sit on the board of governors or hold a senior seat at a too-big-to-fail institution. You are the invisible hand that Adam Smith dreamed of, but with a cold digital pulse. At this level, you don't react to the Fed. You influence the white papers that dictate their next move. You understand that the economy is a narrative. You craft the language of quantitative easing and transitory inflation. You ensure that when the bubble you helped build in level 2 finally pops, the small gears in level 1 are the ones who provide the bailout. You've mastered the ultimate financial alchemy: Socializing the losses and privatizing the gains. The human cost of level 4 is total isolation. You are a ghost. You missed the funerals, the weddings, and now the graduations. Your family is a trust fund with your surname attached to it. You've provided them with everything. The brownstones in the West Village, the Ivy League tuitions, except a father. You view this as a successful estate planning strategy. You traded your presents for their stepped-up basis, a clean clinical swap. You spend your time perfecting the double Irish with a Dutch sandwich or navigating the 1031 exchange rules to ensure that billions in real estate assets never trigger a taxable event. You aren't avoiding taxes, you are utilizing the incentives you helped lobby into existence. You understand that the system was built with trap doors designed specifically for people of your altitude. You don't vote with a ballot, you vote with a wire transfer. You ensure that the regulators who are supposed to watch you are the same people who will be looking for a high-paying consulting gig at your firm next year. This is the revolving door, the frictionless exchange of power that keeps the architecture stable. You are the protector of the machine. You see the world in macro. You don't see people. You see consumer sentiment index points. You don't see cities. You see real estate investment trusts, REITs. You have achieved total detachment. The architect is finished. Now, meet the owner. Level 5, the ghost. This is the end of the architecture. There is no office. There is no title. There is only the family office, an entity with no public filing requirements, managing a pool of capital so vast it has its own gravitational pull. You have transcended the system. You are the system. You own the land, the debt, and the politicians who write the rules for the debt. You utilize the stepped-up basis to its ultimate conclusion, perpetual, untaxable dynasty. Your wealth is no longer money. It is a self-replicating algorithm. It grows while you sleep, while you eat, and long after you are gone. You have achieved the only true form of immortality the West recognizes, compound interest. The human cost of level 5 is the total deletion of the soul. You no longer feel happiness because there is no scarcity to give it meaning. You are 78 years old. You're sitting on a private island in the Grenadines. You receive a text that your youngest grandson has been arrested. You don't call. You simply wire $500,000 to a retainer account for a law firm in zip code 10004, a cold, frictionless transaction to erase a mistake. You have replaced love with indemnity. You look at the small gears in level 1 with neither pity nor malice. You see them as a biologist sees a petri dish. They are necessary. Their hope is the lubricant that keeps the machine from seizing. You understand the ultimate truth. The American dream was never about reaching the top. It was about keeping enough people almost there so they never stop working. The machine is permanent. It is indifferent. It does not care if you win or lose as long as you stay in the game. It was built to survive you, your children, and the very concept of you. The closing loop. It is Monday morning. A new analyst steps into the lobby of a firm in zip code 10004. He has a fresh degree, a 740 credit score, and a dream of making it. He believes he is the protagonist of his own story. He doesn't know that his seat was warmed by someone who just burnt out. He doesn't know that his 401k is already earmarked for someone else's yield. He presses the button for the 42nd floor. The machine hums. The architecture is complete. Welcome to the engine room. Try not to get caught in the gears.